Shana Sissel is president and CEO at Banríon Capital Management. Shana, good to have you with us. Of course, we have talked extensively about this $5 trillion tech rebound. The Nasdaq 100 trading at what, near 26 times estimated earnings. But are you seeing any other parts of the U.S. stock market that are looking expensive to you? And if so, where can you still find some sort of value and bargain?
So I think that overall the markets are looking quite expensive. If you look, you touched on the Nasdaq, but even if you look at the S&P, trading over 20 times forward earnings. But what is more concerning is the number of non-earners in the indices. On average, you expect to see anywhere around 11 to 12% non-earners in the Russell 1000. And right now we're at about 16%. In the Russell 2000, normal is around 27, 28% non-earners. We're at over 42 right now. That indicates that earnings are under pressure, which suggests to me that a 20 plus times multiple is expensive. There are opportunities, though, outside of technology. Technology is, the fast-moving, the high-flying, sexy area of the market, but cyclicals in particular are very attractive. You look at something like materials, the entire market cap of materials is smaller than the market cap of Apple right now in the S&P 500. And so you just have to look at pockets where there's some opportunity. I think materials, industrials, energy, those cyclical names are areas that I think are attractive.
Are those sectors going to be impacted by a pullback in economic growth here in the U.S., whether that's a softish landing or a hard, deep recession?
Well, typically, actually, cyclicals do well coming out of a recession and at the bottom. Typically, in a higher inflation, higher rate environment, anything that is sensitive like that to overall economic conditions, to supply demand, can actually do quite well. I know it seems counterintuitive, but actually those are the areas that tend to do well at a bottom and coming out of the bottom. So those are definitely areas I'd be looking at. Technology has some great tailwinds for long-term changes and disruptions that are going on. And there's certainly players in that space, a name like NVIDIA, which is a name that I've followed for all my career and the name I really love, is one that will benefit long-term. Apple's another name. So there's definitely tech names that could continue to do well and trade at a higher multiple because of some of the tailwinds. But I do think there's better opportunities in places like industrials, materials, and energy.
Apple is now, of course, as we know, a historic $3 trillion stock. NVIDIA is up almost 200% year to date. Do you still feel like there are opportunities where you would be adding to those positions, I guess, on pullbacks if we get them?
I'm not necessarily adding to them, although there's two stocks that I continue to like, so I'm not selling them either. I wish I could go back in time to 2006 when I actually pitched Apple to a portfolio manager at a firm I used to work at, and he called me crazy for thinking that the stock was going to be worth $100 a year later, and it was worth more than that. Now it's a $3 trillion market cap, and I feel like I wish I could go back and say, told you so. But they're names which I think long-term are good names to hold. I wouldn't be adding to them, but I'm not selling them either.
Hey, I hope he's watching this right now. But when you take a look at some of the global developments, are you watching out for any potential exposure indirectly maybe to the China story if stimulus is forthcoming?
Yes. So some of the names I like is something like Caterpillar would do really well when you think about the China story. It's a stock that's trading at a very low multiple at about 12 times. And that is actually going to really benefit from the China story. And there's other names like that. That can benefit from the China story, especially in that industrial area, anything in the manufacturing, infrastructure, things of that nature. There's also some opportunity in consumer, although I'm a little less bullish on consumer just because I think that the overall economic sensitivity in the U.S. consumers' impact in driving consumer goods and consumer consumption is a little bit iffy to me.
How much will what happens in China help or hinder what happens in the energy sector, which surprisingly in the first half of this year has been the worst performer after becoming the best performer last year?
Yeah, that's actually one of the reasons why I'm taking a second look at energy right now, is because it has done so poorly and there's some real opportunities there. I think the China story is not as impactful on energy markets as it once was. I think that there's other things that are impacting the energy markets, but What I do believe is that it's beaten up going into like the early cycle of an economic cycle, going down into a recession, and at that bottom, cyclicals like energy do better. Supply demand is definitely going to be impacted by China. Do I think it's going to be a really large impact? Not necessarily, but I do think that given how beat up the sector is, it's an area I would absolutely be looking for opportunities in.
Shana Sissel, President and CEO at Banríon Capital Management. Good to have you with us. Thank you. You can get a roundup of all